On Tuesday, 12th of May 2026, Jim Chalmers handed down what many are calling the most controversial budget in over a decade. Headlined by a promise to help young Australians finally get into the housing market. The pitch sounds great. Slow the property market down, give the next generation a fair go. But our colleague Tim Dawe, partner and independent financial advisor at IWP, wrote a piece for us asking a deceptively simple question. Are young people really better off? Hi, Tim.
Hi, Cameron.
How are you?
Good, thank you.
That's good, mate. Look, I know when this budget was launched on that fateful Tuesday night, I said in our last podcast, actually, I just got a little bit frustrated at the budget itself. And I think the part that really got me was, again, it's politics and I shouldn't be surprised by this, but what they were trying to do, I don't think, I'm with you with your article, by the way, I don't think that's actually going to work. And, you know, the idea that young people are really going to be better off as a result of this budget and these changes is flawed. So you wrote an article about it. Thanks, Tim. Thanks for spending probably an hour, 2 hours writing it. And now we're going to talk about it for 15, 20 minutes. What inspired you to write this article, mate?
I am a political nerd at heart. Let's just put that out there. But this article and this podcast, I guess, is not designed to be around, you know, be Labor or be Liberal, support one or the other, or don't like the other one. I guess the base behind writing the article was more around don't sell a budget on a premise of this is all for young people, when I clearly think it's not all for young people. No. So I am stubborn. I do like having an argument, but I just thought that'd be an interesting topic to write the article about, was a bit of a view on it.
So when you say it's not for young people, your view, also mine, but when you say it's not for young people, what do you think? Why isn't that right?
How long have we got on this podcast, Cameron?
We've got 15 minutes.
No, we're not. We won't get into all the detail around why it's not good for young people, but I think obviously sold around the premise of housing was their key criteria. And I've got 2 young girls, Cameron. I know you've got young kids. I think that the notion of them needing to enter the housing market one day is something we're already fearful of, is how are they going to be able to afford it?
Yep.
So trying to tackle the housing issue and how do we slow down prices so that young people have got an opportunity to catch up at an ideological level, I think is a fair point, and one that I think will resonate with a lot of people. The other side to that coin is that, well, it's great trying to do that, but then you didn't really go and cut spending, you just spent heaps more money, which means that our debt levels are going to continue to go up, and that has to get paid back one point in time. Yeah. And that could mean for young people, more taxes for them one day, or who else knows, what else are they going to cut in the future to sort of counteract the debt levels going up? That was probably some of the key arguments I had.
Yeah, that's fair. My recollection was there was an extra $6.2 billion being spent in this budget. That's what I remember.
Yeah, and that's probably, again, put political sides to your political bias to the side. That was probably one of the things I took out of the budget was, geez, the spending is still going up. I would have thought if we're being financially responsible, the spending would be going down.
Yep. In an inflationary environment that we're currently living in.
And that's the second point to this, right, is put aside, I'm not going to say put aside, but we're talking about our kids and younger kids being able to get into the housing market, right? What about the people that are already in the housing market that have gone and stretched themselves? And the government has put forward 5% deposit options where they're going to back you up and support you. Yep. What about the people that got in under that program and are now dealing with potentially 3 interest rate rises in the next 6-9 months, if we listen to The Economist, Cameron, of course?
So let's just work through this a little bit, right? So what is being argued by the current government is that they need to make housing more affordable for young people. Like that's the line you hear.
Correct.
Now let's actually work out what that means. Making housing more affordable for young people means that the price has to fall.
Correct.
The values of properties have to fall. Now, since this was announced, my understanding of auction rates around Australia, they've just dropped off a cliff. Mm-hmm. Like if you're an investor, and we see it at the moment, and we're talking to clients about it at the moment, but if you're an investor, you're not sure what ground you're playing on, so you're not going to make a move yet, right?
Correct.
But But also, if you're an existing homeowner, or perhaps you're you own properties or whatever it is, the idea of being happy that the value of your property, your asset that you've built over a period of time through an existing set of rules that you've worked through and you've worked really hard to pay off your debt over time. The idea that that asset, which is probably one of your main assets in your life, is actually going to fall in value, because that's what we're talking about. Because we've got to make it more affordable, so we've got to make all houses fall in value. I don't reckon anyone's signing up for that.
No, and I think there's a few points in that, but I don't think anyone is going to feel better if their wealth is coming down. And like you said, home is main source of wealth, so no one's going to like that. I think when you talk about auction clearance rates, I haven't seen the data, so I'm sort of speculating a little bit here, but I think at the upper end, there's definitely going to be a drop-off in housing prices. And while there is some uncertainty, that's obviously going to extenuate that as well. I do feel that will come back. I think
it's more the uncertainty.
It's probably, it's all created uncertainty in the short term. I think in the medium term, that will fix itself up, so I'm not too concerned there. But it's probably around first home buyers are playing in a space of, call it $600,000 to $1 million. Let's say it's probably a fair space to be them price point for them to be looking at. Is there really going to be less competition in that space though? Because if we do have a bit of a property correction, investors, self-managed super fund holders, I don't see them running out of that market altogether, but it's probably more short term. I have this real fear that that's not going to work. This notion of it's not going to collapse prices, it's going to slow prices was the way the government put it. I just don't see that actually playing out. And again, the other issues that they're going to face, I don't think it fixes that.
No, I think one of the biggest issues that the housing market has is it's actually a lack of supply problem.
Correct.
So there's not enough houses being built, and subsequently it's a lack of supply problem. So if you want to reduce, this was just going back to when did I do economics?
Macro
first?
101.
Yeah, I think that's what it was. Yeah, uni, macro 101.
Definitely first year of uni.
Yeah, you increase the supply of something, and everything else being equal, ceteris paribus, what that then essentially does is reduce the price, right? So if we are able to increase the supply, that is going to reduce the price of those houses.
Yeah, you've opened a bit of a Pandora's box here, Cam. So I don't know how far you want to go with this, but so one of the points I put in the article was actually it talks to this, right? Everyone in Australia will agree there's not enough houses. We need to build more. Now that leads to we've seen a collapse in plenty of volume builders. So the solution to building all those houses is not going to be volume builders. It's going to be helping younger people who are chippies going and getting their buildings license and starting to take this on. Now, what the budget has done with some of the changes to family trusts, and I know I'm sort of shifting gears here a little bit, but I will come back to it, is, well, if we need more builders need to set up businesses, historically have run businesses through family trusts, taken big risks. Let's not forget here, if you're a young builder building a few homes, goes well, maybe you now look at, okay, well, do I take on a subdivision myself? Do I go and buy a block of land, split it in three, build the three houses and sell them off, hopefully at a profit, obviously. Those builders who have now set up operations through trust structures, which across our business, we work with a number of builders. That's a fairly common strategy, is to do it through a trust structure. They're going and borrowing $1 million, $2 million, buying the land, subdividing it, putting in the effort to build it, carrying all these costs and paying the interest on all these loans. And at the end of the day, they're now disadvantaged by these new changes. Why are they doing that? They're doing it, obviously, yes, to try and make a profit, but they're also doing it to help try and solve this problem of housing supply, like you just mentioned. So we've now gone and given a disincentive to these people to build homes, take on risks, be entrepreneurial, and yet the government, on the other hand, wants us to build more houses. So
it's a dichotomy, isn't it?
Your supply demand, well, to get supply, we need builders building houses and people willing to invest in that. And the trust changes in particular have probably played against that rhetoric, I guess. Yeah, I agree. Look, I just don't think it works. Functionally, I just don't think the idea works. Like we do need more supply in the market, so we can have so house prices are then subsequently more affordable. And I'm not even sure if this is a problem that can actually be solved. But what I would say is that do I have this right? There's going to be more millennials, maybe Gen X, something like that, as voting public than there is going to be baby boomers at the next election. Yeah.
So I think what that then means is that, like, so the current government is trying to appeal to what the voting public is going to be. I mean that might be a little bit controversial.
I think that's politics, Cam. It's pretty,
well,
let's take from the people that are going to vote, have a lower say in the vote and more in the highest.
And it's an easy thing for them to sell in the sense. Well, hang on, actually, maybe is it? I think the concept of it is an easy thing to sell, because the concept is, and what they used to sell it was, particularly around the trusts, is that we don't like the idea of someone earning $1 million a year and then distributing that money out to people who don't already pay any tax, to make sure that instead of them paying $450,000 a year in tax, maybe they pay $200,000 a year or $300,000 a year in tax. They don't like the idea of that. But as we were chatting about off air, that strategy doesn't work. It used to, but it's changed, right? So it doesn't work, because you've got to physically pay the money to those people that you're distributing the money through to anyway. And I don't have an issue with that. I think that's how it should be.
I think we all sort of agree that was a little bit of a free kick, and that loophole's now been closed. Yeah. So be it. I don't think any of us in this office sit here fundamentally and go, oh, it's really annoying they did that. We understand why they did it. Debt levels, need to raise some revenue, cool, cut a few loopholes that existed and level the playing field a bit. But where I think they've missed the boat a little bit, and you can give me your thoughts on this, is the trust structure concept is they've hit that broadly. Now, there's trust structures where someone has $15 million in investment assets and is using it to minimise tax, or there's trust structures where people are running small businesses to protect their own assets. So if you're now that builder running a business, building houses to help with supply, it's probably fair to say, well, if I'm going to take all this risk, at least at the end of the day, if something goes horribly wrong, I'd like to know my house is safe, right? Which I think is a fair enough point. You're taking a risk, maybe some sort of way you can protect yourself is probably a good thing. But by doing the all-encompassing, you've now hit those small business owners or builders, as we're talking about, the same way you've hit the mega wealthy. I don't think that's fair, and I think maybe that's got to be something before these rules are passed that could be looked at. Is there a way we can differentiate them rather than hitting them all the same way?
One of the things I did see in the budget was some of the announcements that if you were a primary producer, so a farmer, you're exempt from some of these changes. Yep. And again, the cynic in me looks at that and says, well, we can't sell that to the public, so therefore we're not going to try. Yeah. Right. So maybe they'll also try. That will then also apply to builders who are going out there and doing the hard yards. And
let's find out, Cam, because like I said, it's not just limited to builders, but there's plenty of small business owners, and it's been a few weeks now since the budget, but we saw plenty of memes on our Instagrams and Facebooks about welcome my 47%, my new shareholder in the business, which gave me a good laugh for a few weeks there. But yeah, again, like the people with startups, they're going to get punished severely under this. And I'm going to drag you back a second to your point around supply, and this is not trying to be controversial, so let's just put that out there. But one of the issues with supply in Australia is migration. So it's just saying that, there is a reason one nation has surged. Agree or disagree with it is because we can keep building houses, but if we keep having immigration levels where they're at, then that's also going to help. Yeah, it's going to make an impact on that. So I'm not saying I'm anti-migration. I'm not. It's trying to find that's also going to have an impact on are younger people better off.
Built, right?
They're going to be
more supply to cover that.
Correct. So again, it's contradictory what the budget is saying.
It definitely is. Yeah. Hey, one of the things that we should talk about is what are the other options. So making the assumption that as a government there's too much money being spent and therefore there's not enough money being paid off debt. Yeah. Which they have, and that's gone up considerably over time. So making that assumption, what are the other options that are out there that they could have used?
So are you suggesting maybe we don't spend, I think it was $4 billion, giving everyone a $250 yearly tax handout in 3 years' time and not now? Because this probably leads back to,
it just won't happen. Wasn't that 2028 that we're going to do?
Is it two financial years' time? You always sit back when budgets
which is when the election is.
Yeah.
Well, there you go. It's the election.
Yeah, but why announce it now? Why not wait till?
Oh, they'll definitely re-announce it,
and maybe it'll be more than $250. So that the cynic in me again, coming back to the article, is let's hit everyone with these really significant changes now when
Yeah.
they don't like us, and in 2 years before the next election, we'll hit them with all the sweeteners come the pre-election budget. Sorry. Coming back to what else could have changed, or I'll go back to one thing before I answer your question, is maybe the government could spend less would be handy. Because if we cut spending, we reduce the impact on inflation, we reduce the impact on interest rates, and therefore young people might be better off on that. The ones that are already in the housing market might be better off by that. The ones that are not are paying a higher cost for all the goods they're using. So I'd argue even if they don't have the home, they're already getting hit by the impact of the budget. You're now asking me to give you an answer as to another way to tackle this. Well, as I put in my article, Cameron, the GST might have been one way to tackle it. It's a consumption tax, right?
Yeah.
So if the more you spend, the more you pay. So maybe if you had, you look around and go, well, what options have we got? Well, rather than trying to tinker with tax rates further, or while they're trying to find ways to increase housing supply, that would be a good way to cut government spending. So reduce what they're spending in the budget and increase the GST would then target the ones who have more money by default who are spending more.
Yeah, I was just thinking that. Yeah, so the more money that people have, typically the more money that they spend. Well, that's what we see. Yeah.
Correct. Yeah. And those that don't have don't spend.
They're being taxed more because they're spending more money. There was
and that
it's probably politically unpalatable for them to touch it, right? Like it.
Well,
maybe
again,
that's a reason why. And then the other thing that they didn't touch is super. Like there was no changes to superannuation.
Well, I had this discussion with a client this morning, Cameron, and do you think the reason for that is they've given nothing to self-funded retirees for a fair while now to be a bit harsh to then say, oh, we're going to pin your super, or we're going to...
I don't know. I think what I will say is I think it's coming. I do.
I think we've said that for a while, though, to be fair.
I've been saying it for a long time.
Yeah.
Well, it has. Well, I mean, we've got Div 296.
We
right?
do
So
have
it
Div
is
296.
coming. And transfer balance caps and the like. So it's here. But one of the things I've always thought of is, we have, if you've got less than a couple of $1 million, you can draw down a pension tax-free and not pay any tax on any of the earnings, right?
Yep,
I just
correct.
think it's like this tax-free haven.
Well,
They've still got to have the incentive to get the money in there. But
correct.
I always wondered,
that's
5-10%, something like that, it's still incentive.
It is, exactly. It's still better than your marginal tax rate, right? But pull that apart a little bit is, you don't tinker with superannuation. You don't necessarily anger the baby boomer type voters. So while
they're pretty angry.
While you're not, it's fair. But you're not maybe, look, you're probably right. They're probably pretty angry, but maybe you're not just completely infuriating them at the same time.
Yeah.
But superannuation is still a very good vehicle for investing in. So people who are building wealth, it's a great vehicle, but go and find me the 35-year-old with 2 kids and a mortgage that is thinking, awesome, this is great. I'm going to pump money into my super for 2 reasons. A, they need the money now to help their kids and pay off their mortgage. But B, what likelihood do you give it that the government, whether it be Liberal, Labor, whatever, doesn't change the superannuation access rules between now and the time that they hit 60, so a 25-year period? Is super still going to be accessible at age 60 by then? Is it going to be 65? Is it going to be 70? So uncertainty is being created. Are you going to go and pump money into superannuation when the outcome is uncertain?
Well, this is what constant tinkering with the rules does, right?
Yeah.
It just creates uncertainty.
Yeah, it doesn't create
And
trust.
when you're a 30-year-old, a 35-year-old, 65 is a long way away.
Correct.
As someone who's approaching that.
Not quite yet, Cameron.
I'm closer than the 35-year-old.
You're closer than me. Let's just leave it at that.
I am closer than you. It's not that. It happens quickly. So
it does,
It's not that far away.
No, looking at my kids, they've grown up very quickly, which is, again, as I said, you're trying to look at the positives to it. Is I can see where they're coming from with the positives to this, but so much of it is outside of their control. I just feel if anyone believes this budget is actually around helping young people, they are kidding themselves. Yeah. This budget is around sugarcoating. We're trying to help the young people so that we can go and spend more cash, drive up inflation and use the money elsewhere, which that's where I have the issue. I understand politics. I love politics. For anyone listening, I am a political nerd, but it is just don't lie. And I just feel this budget lies, and watching it live. And we had our little WhatsApp group going live, and you're like, this is a joke, right? This is not like you're kidding. Aren't you? Like trying to, the way it was being spun, and the way of trying to kill aspiration, trying to kill entrepreneurship, and give the little rewards that those people get for risking so much, I feel, has just been targeted unfairly.
So what do you think is going to happen to property prices over the next? Let's say that this budget is delivered in its current form.
Yeah.
Right? What they've proposed, they get it through, it goes through. What do you think is going to happen to property prices as a result of this budget? Do you think property prices are going to fall?
I'm smiling because out of all the things we do for a job, Cam, this is the one thing I've just pretty much given up on, because every time I think the property price is going to do one thing, it goes the other way.
I'm going to jump in here. I'm going to tell you a quick story. Sorry, I know I asked the question, but I've got a quick story. It's worth telling.
Okay. So I look forward to this.
About 4 years ago, I was cleaning out the garage. And I know, right? And I had this article from Shane Oliver that I'd cut it out at the time. This is like, and it was printed
back when we used to get the newspapers.
Yeah, that's right. This was printed mid-2000s. Yeah. Right? And it was predicting property prices.
Okay.
So this is what he was attempting to do, but it also had in the article the median price in each of like about 50 suburbs. Mm-hmm. And I remember looking at it, and I'm like, North Carlton median price, which now would be, I don't know, like 1.5 or something. Right?
Yeah.
Median price of houses in North Carlton, $350,000. Right? Brunswick, 230. I'm showing my age here, but the prices were so astronomically low.
Yeah.
But the headline in the article was property prices are overvalued by 35%.
Mm-hmm.
So even at those prices, like, how wrong can you get?
Yeah.
It's overvalued by 35%. Like Toorak property price, I think it was like 600 grand or something in Toorak.
Bit higher now. Yeah.
Bit higher now.
But, and this is where, like I said, I've given up trying to forecast, because every time I think like there's an excuse here for the property market to slow down, it just has continued to jump. Yeah. So where do I think they'd be? If this doesn't slow the property market prices, I don't know what will. So I do feel this will have an impact on this. But again, is that a good thing? Well, potentially, but this is, again, I'm probably delving a little bit, is, do I think, maybe it's a different question, do I think young people can afford to buy property on their own? Geez, it's incredibly difficult. Yeah, I'm already, as a parent, and you're as a parent, obviously, I think we need to support our kids to buy a house regardless of whether this slows the market or not. That's going to be really tough for them to do it on their own. So these changes, yes, could help slow the property prices. I don't think they fix them. Interest rates high, I mean, difficult to repay. Lost my point. I had a really good point that I was getting to here, Cam, and now I forgot
interrupted with my story.
I did have 2 points. This is one of them, was around, don't forget the people that have got into the property market started to pay that back, now dealing with higher interest rates, which makes that more difficult. Right. Potentially end up in a scenario where they're trapped in said property because they can't refinance to a better rate because of where they are. Or if they they bought that property with the intention of exiting and buying a bigger family property in 3 or 4 years' time. Obviously, equity growth in property is now coming down because you've slowed down property prices. Ability to borrow is now harder than what it was. Yeah. So potentially going to a new home is going to be more difficult. So I don't know if that solves that problem. And I'm still trying to think about what my point was that I had before we went off on a tangent.
It was entirely relevant, I'm sure.
Let me flick through my article and see if I can find it, Cam.
Okay. All right. Well, look, we might wrap it up there.
Okay.
James, our specialist videographer, is giving us the wind up, so let's do that. Mate, thank you. Thanks for writing the article. Appreciate your time. Appreciate your time in coming in and talking through it. For those who've got questions about it, feel free to send them through to your advisor, and we'll go from there. Thanks, Tim.
All good. Thank you, Cameron.
Okay, cheers.